Good morning, traders. It is Friday, July 25th, 2014, 8:01 a.m. Chicago time. As always, thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Quick rundown of the news. The German July IFO business climate misses. Comes in at 108 versus 109.4 consensus. That's a key number for Germany. UK Q2 GDP in line comes in, Q on Q comes in at 0.8%, year on year at 3.1%, which is the consensus. You may have heard yesterday Espirito Santo Financial Group seeks protection from creditors, says it's unable to meet obligation, seeks controlled management. I think that's partially what caused the quick drop yesterday in the indices. U.S. State Department says they have evidence of Russian artillery firing across the border to attack Ukraine military. And also the Russian Central Bank raises key rate to 8%, expected to raise it to 7.5%, but they raised it an extra 50 basis points to stem outflow of capital from Russia. U.S. durable goods orders came in at 0.7% versus 0.5% expected. No reaction there. And as far as upcoming releases for today, it is an absolutely quiet day when it comes to economic releases, none seen. Let's take a look at the market and what it has done yesterday. I want to remind you to be sure to click on the little icon on your YouTube screen at the bottom right corner, the settings icon, and select HD 720 HD to see my screen with clarity. Otherwise, it's pretty fuzzy. And also, if your broadband does not allow it, then Google will degrade the quality of the screen. So if you have issues with that, there's really little I can do to control that. Let's look at yesterday's auction. Yesterday opened in range, just barely. Opened in range. It was an open auction, tested 82.50 to 84. That was the opening swing. Took out the prior day's high by 2 ticks, which it did a couple days ago right here. 80.50 takes out very quickly, takes out the prior high by 2 ticks to 81. You can see it on this day. It fell right back into the point of control at 78.50, got to 78, bounced back up, and it dropped. Yesterday, very similar. Open auction in range, takes out the prior day by 2 ticks, drops to the point of control by 2 ticks. Except this time, instead of continuing lower, it pushed back up to 84.75, making new highs for the year. And then it found sellers, its sellers, and so it started to rotate through the value area. The expectation was a test to 79 value area low. It stopped 2 ticks ahead of the 79 at 79.50, and then started to walk itself back up. At this point of the day, the overnight high and low had not been taken out, so the overnight stat was still in play. Again, the overnight stat is that on, I think the last time I updated it was February this year. Out of 1,400 days tested, 97% of the time the overnight high or low is taken out during the day session. Past performance not indicative of future results, of course. That could change at any time. So we tested the overnight high, but to the tick, 85.75, which qualifies as the overnight test. The stat I did on the overnight statistic is actually not just to take it out, but to retest. So a touch of or a break of the overnight high or low is what gives us that stat. As soon as it touched the overnight high, 85.75, rolled right over and pushes right across the OS, right across through the mid, through VWAP, through everything, and tests the prior day's close again, bounces back up, and then falls right off, and then puts in a double bottom at the IB low, which again is another statistic. But unfortunately, the second bottom was put in late in the session, and the expectation was for it to rotate back up somewhere to the mid or so, to this 82, 82.50 area, and then rotate back down and break that low. But the session ended and we ran out of time. So the expectation was for the overnight session to basically break that 79.50 and start pushing lower to areas that we have below, and that's what happened with the Amazon release and the fact that that stock got a little bit beat up. The market actually reacted to the downside. We'll look at that in a minute. So that's what happened yesterday. Overall, things to note about yesterday. It's a balanced profile with the point of control inside of the prior day's value area. So the value area of yesterday is this gray area. This bright pink is the point of control, or the most traded price by volume. And what we have yesterday is that the point of control was inside of the prior day's value area, showing us that value is really being accepted at this price of 82, 82.50. Even though the overall value of yesterday increased in price up to 84.25 to 81.25, and then also the we put in a higher high and a higher low. But overall, even though price action shows that the trend continues higher, value showing that that it's only marginal. It's a very, very light increase in value upwards. Normal variation day, and then as I said, the market continues its trek upwards. We'll look at that bigger time frame chart. Something to note, we still have that gap below at 73.75, the gap zone from 73.75 down towards 70. The overnight low is 75.50, and we're trading 19.77 right now. So we're beneath yesterday's auction, and because these days represent their own little balance zone, I put this composite here, this micro composite here, this yellow, and you can see very clearly that 79.80 area is going to be important today, and then the overall point of control for this area, the micro composite point of control, which is MCVPOC, is at 81.75. 81.75. So that's what the market has to take back. The buyers have to take back and hold before they can have a good chance of building the energy to take out 85.75. Otherwise, a test into this and failure back out of this yesterday's range is likely to target the gap zone, and again that 71.50, 71.25 that I had mentioned on Tuesday as a target below, initial target below. Below that, 70.50, then you have 71.25, another gap. You have 63.25, 71.25, 66.5, which is a gap plus an LVN, a key LVN over here, and then below that, 63.75, and that's well within range. It's only about 14 points away. That's well within range of today if selling does happen. Let's look at the overnight to see what that's shaped up to be. Overnight profile, pretty boxy, pretty low volume, 168,000. Overall, the overnight gap down on the based on yesterday's close, it gapped down on the Amazon news, and then it tried to recover and get back into yesterday's range. But throughout the session, when Europe opened, it just could not hold prices higher. Put in a low at 75.50. Very boxy profile. Nothing special to glean from this. This overnight low looks fairly strong, but the market seems to be working its way back to it. This is an impulsive move down, so the expectation is that the 79 is actually a pullback and a further low, is likely to be forthcoming. However, that's the overnight session. I don't put too much weight on the overnight session as I did the day session, since the constituents are not trading, the 500 stocks are not trading. So the expectation today is clearly we're going to open in a gap. So the expectation is an open auction out of range. We still are in balance within this balance zone. So the expectation is an open auction out of range. And then for the market to try to find responsive buyers. So essentially, in order to do that, it's likely to test a little bit lower, advertise prices a little bit lower, just calling for buyers to step in. And then as soon as it finds buyers, I expect that it'll buy. The expectation is for it to find responsive buyers to 79.50 first, the double bottom from yesterday. 79.50, the double bottom from yesterday, and the MCLVN, MC low volume node here, this area. If it's able to hold that and push in, then it's going to have to deal with yesterday's value low, and an 82 quarter becomes 81.75, 82 quarter becomes the next area of resistance, and now the overnight high is at 80.75. So the initial response, the initial action I expect is for it to push down low enough to find buyers. Remember, the market moves down to advertise for buyers. The market pushes higher to advertise for sellers. In other words, it keeps increasing prices to motivate sellers to come in, because the market's task, as I always say, the market's task is not to run your stops, not to frustrate you, not to make you angry. The market's job is very simple. It is to find liquidity and bring as many buyers and sellers as possible to become active, and to find that balance given the current news cycle, the current geopolitical situation, the current earnings, and so on. That's what the market does. It seeks to find value by advertising price. When you see this price move here, it's not just an uptick or a downtick. It is an advertisement. It's saying 76.50. Are we good here? If somebody buys it up to 76.75, then it's going to say, are you good here for 76.75? Anybody want to sell it down? Does anybody want to buy it up? You want to buy it up? Okay, let's go to 77. Any sellers coming in at 77? No, let's go to 77 and a quarter, 77.50. That's how the auction works. So the idea that the market's out to get you, I think, sets you back as a trader, creates a belief structure that is not conducive to you staying objective with the market. It makes it personal, and it's not personal. So the initial idea here is that the expectation, or the main trade of the day, is that it would probably need to advertise prices low enough to find buyers, but as soon as it finds buyers, I expect the responsive buying to be the stronger rotation up. So I expect it to float down, and then a responsive rotation up to 79.50, 81 quarter, 81.75, and 82 quarter. Very murky area here. I expect some resistance up here. And then I expect it to roll over, chop around, and if it wants to hold on to this value and build value up here, now we could start working ourselves up to 84 and a quarter, and so on and so forth. But we'll see how that plays out. The other hypothesis is that it does test lower very quickly. It finds responsive buyers quickly, and then those responsive buyers fail to continue price, bring it into range and into value, and then you have a market that's going to build a belly down in here, build value down in the lower end of balance. Okay. The third hypothesis is that it does find buyers, and then it's immediately rejected, which is unlikely given the mood of the market and the intermediate intermediate and long-term trend. This is not so expected, but it pushes higher, it finds sellers, and then it starts to sell off down into 71.50, 71 quarter, 70.50, and 66.50, 63.75, those areas. So it starts to work itself down through these structures down here. This is not the likely course, but we'll see what happens. In either case, we have a plan in place, and our job now is to figure out who's active and what it's trying to do in the market, and to find our spot that gives us a better chance at scaling out or getting our target than for the market to take out our stop. And then that's trading in a nutshell. Okay, as always, risk control is paramount. Headline risk continues to be elevated with the situation in Gaza and the Ukraine. There's also, I saw on the news feed that there was an item about an Air France flight from Oslo to Paris beaconing for an emergency, and was approaching Charles de Gaulle. I guess that's just a routine flight emergency. I don't think it's anything malicious. So we'll see how that plays out. But there is the world's on edge, and since the world's on edge, the level of uncertainty is higher. So the reaction in the market's going to be a lot more aggressive, in my opinion, when news does come out. So keep an ear out for what's playing out. That's all I have for you, Stage 5 traders. We have our weekly webinar at 12 Central, so you'll get a link for that in your email. Thanks for joining me, and have a wonderful weekend. Take care.